Invest in your future with just $1 a day. Top stocks to consider. If you're looking to invest in the stock market, you don't need a large amount of capital to get started. In fact, for as little as $1 a day, you can begin building a diversified portfolio of stocks. By choosing the right stocks, even a small investment can grow over time and provide significant returns. That's why in this video, we'll explore some of the best stocks to buy with just $1 a day, based on factors such as growth potential, dividend payouts, and stability. Whether you're a new investor or looking to add to your existing portfolio, these stocks offer a low-cost way to start building your wealth. So, watch this video till the end and find out. But before we talk about this, don't forget to click the like button, subscribe to the channel, and hit the bell icon. Now, let's begin. Most investors can't seem to get the best stocks. Shares of companies like Amazon and Warren Buffett's Berkshire Hathaway have made people rich, but they cost thousands of dollars each. Many investors don't know about the other side of the stock market. According to data from Fidelity, the average American household has $40,000 invested in the market, and the average amount in each stock is less than $600. This means that shares of Tesla are just out of reach for most people. When you open an account through the link I'll leave in the description below, you'll get 2 free stocks worth up to $1,000. Some investing apps offer a great service called fractional share investing. With this, you can invest any amount in any stock, no matter how high the share price is. For example, if you wanted to buy shares of Amazon in the past, you would have had to save up more than $3,000 before you could buy a single share. With fractional share investing, you can put in an order for any amount you want. I looked for stocks with a share price of more than $250 each. These stocks are great for investing in small amounts. I also looked for companies with strong sales growth over the last 5 years and steadily rising operating margins. This means that not only are these companies making more money, but they're also getting better at turning that money into profits. After running this quick screener, I was left with about 30 stocks from which to choose the top 5. At $291 per share, Fortinet, which has a market value of $47 billion, is the only pure-play cybersecurity company in the S&P 500. It has over 500,000 customers around the world and more than 1,200 software patents. Cybersecurity is one of those universal forces I'm watching over the next 10 years. Ransomware attacks have increased 10x in the last year alone, so this is the kind of theme you should be investing in. Fractional shares will let you add to your portfolio every week. Fortinet is the second largest cyber company by revenue and has a strong advantage in its ASIC technology. This has helped drive revenue growth of more than 20% per year since 2018, and this trend in cybersecurity should keep driving demand for years. Not only has the company's revenue grown, but management has also improved the company's operating profitability by more than 3% over the last 3 years, bringing it to a 26% operating margin, which is more than double the average margin for competitors. This has helped this stock produce a 55% annualized return over the last 5 years, showing how powerful fractional investing can be. Investing just $1 a day over the last 5 years would have given you just over $1,200 and almost 19 shares of the stock worth $5,400. That's more than 4 times your money on just $1 a day. We still have 4 more stocks to show you, but there are a couple of ways you can use fractional share investing. You can save up that $1 a day and invest it every 5 days in the same stock. The company's revenue has grown by 37% every year, and it posted a 4.6% operating margin last year after having an operating loss in 2018. This one is just starting to turn a profit. If you had bought fractional shares over the last 5 years, you would have more than tripled your money and have more than 6 shares in service now. Next on our list is the big one, Amazon, ticker Amazon, which is just out of reach for most investors without a lot of money. Amazon dominates its markets in e-commerce, cloud services, and now streaming with Prime. The company has grown sales by 30% a year over the last 5 years, including last year. That's amazing when you consider that means adding up to $100 billion a year in revenue. Management has always focused on reinvesting to grow the business, but even with that strategy, the operating margin has improved to 6%. The autopilot program has had some problems, but Tesla is still testing and will release a full self-driving beta in July. The market for robo-taxis is going to be huge over the next 5 years, so buying 16 shares of Tesla right now would cost you over $12,000, but if you bought fractional shares for $1 a day, you would have made 10 times your money over those 5 years. Autodesk, ticker ADSK, at $288 a share is the industry standard for software and computer-aided design. The company makes business software and software for architecture, engineering, and construction, so it could benefit from the increased spending on infrastructure over the next few years. The company has grown its revenue at a 17% pace and sped it up recently to 19% year-over-year growth in that first quarter and a 35% increase in free cash flow. Management predicts that the addressable market will grow by 25% to $78 billion by 2026. This would put the current market share at about 6.5%, which is a strong leadership position but still leaves room for growth in that market share and in the overall market growth beyond the potential to continue its strong double-digit revenue growth. Autodesk's operating margin has gone from less than 1% in 2019 to 15% over the last 4 quarters, which is a huge improvement. Even on the lowest return in the group, you would have doubled your money by investing just $1 a day in fractional shares of Autodesk for a 15% annualized return at almost 9 shares of the stock. In conclusion, investing in stocks with just $1 a day is a viable strategy that can yield significant returns over time, especially with fractional share investing. By investing small amounts regularly in companies with strong fundamentals and growth potential, you can build a diversified portfolio that has the potential to grow your wealth. We have presented a few stocks that you can consider investing in, but it's important to do your own research and make informed investment decisions based on your risk tolerance and financial goals. Remember, investing is a long-term game, and patience and discipline are keys to success. I hope you learned something from our episode today. If you did, it's easy to share this video, click the like button, and subscribe. Check out our other videos for more. Thanks for watching, and see you at our next one.